Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Thursday, May 25th edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick on today's show. Surprising amount of earnings stocks reporting yesterday after the bell and this morning. Retail, maybe it's not so dead after all. We're going to talk about all those stocks. Oil had a bit of a wild ride yesterday. Maybe we'll touch upon those Fed minutes from yesterday. And of course, oil, I mentioned the OPEC meeting is of course today, so we're going to be watching that as well. Our guest today is a good one, Jerry Parker. He is the chairman and CEO of Chesapeake Capital. He was one of the first turtles, and I know Joel and Dennis are pumped to have Mr. Parker on the show. Joel, how's it going in the market this morning?
Very good. If you're long the market, S&P's up 6 1/4, 24.08 1/4, taking out that quad top at 24.04. Pre-market high 24.1250. That could be one target on the upside because have absolutely no numbers up here in the stratosphere. Wild ride in crude oil last night. You tested the highs from Tuesday and Wednesday, and then the Saudis come out and said, we're not cutting production. You see the big move here down to the $50 psych level. Gold still hanging in there above $12.50, up $4.80. Silver up 9 cents at $17.21. Dennis, how you doing on this rainy Thursday morning here, at least in the Motor City?
It's raining across the border there too, Joel. Just a rainy day, but the markets it's never raining for because the markets are up here once again, obviously. You know what? I think it's just the play is you just buy at the close. You hold overnight because the markets just go up every day, don't they? Isn't that the best strategy right now? Just buy at the close and sell at the open, and 4 out of 5 days you seem to be making money.
No, you just buy at the open and buy at the close, and then you just take the sell button off your computer, right?
You just don't sell. Unless it's a retail stock.
Well, there's a lot of different. Yeah, well, it depends what the retail stock you're trading here. A lot of different ways we can go here. Retailers are starting to come alive. We could talk about that.
I want to talk, though, and we've got an interesting discussion going in the chat there at premarketprep.com. We're talking Bitcoin here, and it's something we don't talk a lot about on the show. And here's, a question I proposed to the chat, and the chat's, pondering this. How do you, so Bitcoin, has just been blowing, just blowing through levels here. We're up at what, $2,700 or something now? I mean, the currency has just been unbelievable. It's went from $200 last year to up to $2,700 or $300 last year. I mean, it's up like 1,000% a year. Unbelievable move. Everybody's talking about Bitcoin. We haven't talked about it, so let's give it 5 minutes of love here on the show. And my question here is, and chat or Twitter if you want to chime in here too, is one thing, and I struggle with, and why I'm not invested in Bitcoin, why I don't intend to invest in Bitcoin, is because how do I sit back and crunch numbers and come up with a fundamental value for Bitcoin? I mean, if you have a traditional currency like the Canadian dollar, you can look at trade, you can look at interest rates, you can look at what shape the economy is to try to get a gauge for, if people are going to demand Canadian dollars or not. And then you can, look at US dollars the same way. I mean, even gold, you can say, gold has a physical value though, because you can wear it, you can actually, do things with it. Somebody in the chat was saying it's conductor of electricity. I mean, there's some type of core value, some type of bottom line value for gold as well. A stock is easy. You can crunch numbers, and we know price deviates from it. So I'm not talking about price. I'm not talking about irrational exuberance. I'm not talking about any of that. I'm just talking about how do I actually sit back and fundamentally value Bitcoin to come up with, a price target of like $10,000 or a price target of $100. How do I do that?
I don't know, Dennis. I don't know.
Well, and that's my concern with investing in something like this. And what are the barriers to entry here? I mean, okay, Bitcoin's your leader in electronic currency, but what's to say somebody doesn't come out next week and come up with some, better electronic currency?
Hey, Dennis, are you ready for an impromptu guest here?
Yeah.
Jeff Goldman's been trading Bitcoin.
Okay.
And there's another thing called Ether out there, and he's trading that. So let's bring him in live.
Jeff there? Is Jeff at the
No.
Benzinga studio right now?
I'm calling him right now.
Yeah, we're.
Oh, you're gonna call him. It's Jeff. Well, hopefully he's awake. We're pretty early in the morning.
We can catch him. No, I can honestly say that
And this would be a great question for Jeff. We had Jeff on the show explaining the dry ships, last week there, and he
I
did a
don't
great
know
job.
if he's going to be able to give us like the true answer true to your question, but he's been trading it, and there's other things out there. I think it's called Ether. Is that something too?
Yes, that's the thing.
I don't know anything about this digital currency stuff, and I'm going to stick with my traditional stuff. Me and Joel may be too old for digital.
Hey. Good morning, Jeff. You are live on Benzinga's Pre-Market Prep. How you doing this morning?
Good. How you guys doing?
All right, I want to introduce my number one trainer here, Jeff Goldman, who gives me hard workouts a couple times a week. Jeff, we are just baffled by Bitcoin here, and I just told the audience that when have you been telling me to buy it? Since like 1,400, 1,500?
No. Well, I've easily that long, but I made my first purchase April 2015.
Whoa.
It was about $250 per coin. And
are you still holding it?
I am, and
wow.
At this point is literally like yesterday. I made a decision to start to take some off the table just because it's just getting way bubbly at this point. I don't know if it's bubbly a word, but I'm going to use it.
Why'd you buy it?
What's going on, and not why did I buy it? I bought it because I believed in the technology and the blockchain. So Bitcoin is really just the currency, the cryptocurrency that trades on the blockchain. And I'm a big believer in the blockchain technology.
What is blockchain technology?
Oh, you're going to make me do some technical things here?
At 8 o'clock in the morning, we're going to make you jump right in and explain blockchain technology.
And I just want to preface everything. I'm not a Bitcoin expert in terms of all technically how it works and how you mine for it. I'm a trader. So as a trader, I saw this thing go from next to nothing all the way up to 1,500 and came all the way back to 150. This was like 2015. And then I started buying some because I thought it was going to go higher. And it's not just Bitcoin right now. So Bitcoin right now has a $44 billion market cap. That's a pretty big market cap for something that really is just sort of a virtual currency at this point. And it's not just Bitcoin now. Now I'm looking right here. There's a great website, coinmarketcap.com. There's now 728 different cryptocurrencies.
Wow.
728 different ones, of which 7 of them have a market cap over $1 billion. And
wow.
Some of these were started like in the last year or so.
Well, should we start a cryptocurrency? Maybe we should start one if we could go to $1 billion.
I know. I was joking.
Let's do it.
The Benzinga coin. So
yeah, we can do that.
The Z coin.
Call it the Zinger.
There you go. But right now, I think this is really being driven by just one. Everybody wants to get in, and there's only 16 million Bitcoin. It's not a lot of Bitcoin. So now when you've got everybody, it's really getting mainstream in terms of on the news and just that ransomware that was a couple weeks ago. They were demanding Bitcoin. So it's really just hitting the news now, and there's real investors who want to get in, and there's just not a lot of supply of Bitcoin.
What's the
other one
mentioned?
I have so many questions for you, Jeff. I don't even know how we're going to fit them all in if we keep you on the entire show until 9 o'clock. But first of all, what are the barriers to entry here? Because like you said, there's more currencies coming. So why is Bitcoin, flying and flying? If there's more cryptocurrencies coming out, I would think that wouldn't be good for Bitcoin.
Well, Bitcoin's it's the granddaddy of them all. So it's the biggest one, and it's the most mature one. And there's also one Ethereum, which is ETH. That one, it's was 2 weeks ago. It was at $60. It's at $204 now, and that's the one that a lot of people are really getting excited about because you can do these things called smart contracts on the blockchain. And don't ask me to really go into depth of what the blockchain is, please. So, like I said, I'm a trader.
It doesn't matter. We're short-term traders. You're looking at supply and demand.
So
Short-term supply
for me,
and demand.
Yeah, for me, I just I see all the volume picking up and the price going up, and that's what I get excited about. But now there's a lot of speculation getting into these whole cryptocurrencies, and it's starting to feel a little bubbly and a little toppy here, in my opinion.
Okay, second question is, and I proposed this before we called you just to the chat, on a traditional currency, you can come up with some fundamental value, like if you were sitting and crunching numbers, you can look at, let's say the Canadian dollar, you can look at, okay, well, it's more of an oil currency. What is oil doing? You can look at interest rates in Canada. You can look at how the Canadian economy is doing, trying to come up with some fundamental value. That doesn't mean price is going to go to where that fundamental value is, but you can crunch numbers to come up with a number and maybe a price target if you're just using fundamentals, not looking at technicals whatsoever. How do you do that with Bitcoin? Because there's not like a country behind it. There's not like an economy. There's not trade.
Yeah.
That's my question.
I somewhat disagree with you on that because
I'm just saying, how do you do it? I'm not even saying you can't do it. I'm saying, how do you do it?
Right. On a fiat currency, something like the dollar, they just print more dollars. Nobody even knows. I mean, I think technically they do publish how many dollars are out, but they can just keep printing more. So the nice thing about Bitcoin, if it is ever used as a currency, it's got to be compared more to like gold than the U.S. dollar. There is a schedule of how many Bitcoins are going to be. It's called mined. You actually mine for them, and there's an X amount of Bitcoin that are released on a daily, weekly, monthly basis, and this schedule is set for years in advance. So you know exactly how many Bitcoins are out there. It makes it a little more easier to value it. And at the end of the day, it's like everything else. It just comes down to supply and demand. But the supply part is set on Bitcoin. And now all it is being demand driven right now. So fundamentally, I don't know how you value it, to be honest with you.
That's what I don't understand totally, how you do that too. Like I get the supply and demand, and I get if there's only so many out there, well, and there's demand for it, the price is going to go up, which is exactly what we're seeing right now. But, when I buy a stock, even like a company like AT&T, I can say, okay, well, this is a company that makes real money. It's paying me a 5% dividend. There's some type of value here, that, I don't think it's going to zero. I don't think it's, I can sit down and actually crunch a number and say, look, I believe AT&T is worth $40 because of these reasons. I can't find out in my head how I come up and say, I believe Bitcoin is worth $2,700, or I believe Bitcoin is worth $100,000, or I believe Bitcoin is $100. I can't come up with that way to do that whatsoever. It's just being completely driven by supply and demand. And so that's why I have trouble coming in. As a trader, I can trade anything. But as an investor, I look at this and I was like, I don't know how to fundamentally value it.
Yeah, and I agree with you. And then what I also do look at, especially with like the Ether, the Ethereum, you look at all the very, very smart players that are getting into it from Microsoft, Intel, JP Morgan. They're all that was what really moved the Ethereum maybe like in February when it made that first move from like 40 to 80. It was on the announcement that those companies were getting behind it. And then there was an announcement just a few days ago that another group of high-profile companies were also investing in the technology and looking into different ways that the Ethereum can really help make businesses and different applications a lot more efficient. So that was that second move up. So you can value it fundamentally that way. Just say, like, there's some very smart big players getting involved in the blockchain, and who am I to say that that they don't know what they're doing?
Jeff, go ahead, Dennis. One more.
One more question I'll throw to you. I know I've been monopolizing the conversation here, Joel.
That's okay. I hear about it every
so
time I go and
the
work
other
out.
way,
So.
which I'm just trying to think outside the box. I'm just thinking here. So obviously, can value it too is demand for using this currency, and obviously there's certain people online and certain companies online who accept bitcoins. Is it not kind of weird? I find it weird that Bitcoin's worth so much money. If I go buy something for like $10 and I do it in Bitcoin, I'm going to be using like a fraction of a Bitcoin. I'm going to give you 0.00025 Bitcoins to buy my $10 item online. It just seems weird.
Yes. Yeah, no, it is. It's
The
but
whole
there
thing
are
is weird to me.
there's currencies that have like $1 million or million currency. Once because of the hyperinflation in certain countries where like the peso used to be years ago when look, I have a million pesos. It's like, yeah, but that's like $3. So I mean, that might be one type of comparison, but yeah, I mean, it's, for me, that was a whole other thing, about paying for things where I saw companies were able to accept Bitcoin. I'm like, when I was an investor in Bitcoin, and I was like, why would I, if I think it's going higher, why would I ever buy anything with a Bitcoin? Because if I think it's going higher, I'm going to look back, just like, I don't know if you see this news that's out that the first thing ever purchased with Bitcoin was like a pizza it was 10,000 Bitcoin. And now it's like $7 million or something. It's floating all over the internet. You can Google that story that pizza was like a $7 million pizza. Looking back,
I just got one thing, Jeff, and the different reasons that you gave me, and we're looking at it and stuff, is when the you mentioned the Winklevoss brothers were trying to get an ETF going, and that was like a fundamental reason, and I'm like, dude, if that comes true, then, I want in. Now, I never pulled the trigger. It still had the rally. I mean, what's the status of that?
It didn't happen.
It did not happen.
It didn't happen.
I know. I just wondered.
It didn't happen. It did not happen. And that, that was only like 2 months ago. And Bitcoin was trading like at 1,200 then. And then the news came out, and you can look at the chart. It went all the way to like 950. And then settled back, I think, around 1,100 on that day, and has now slowly gone up. There was news out 2 weeks ago that the SEC is going to reconsider the ETF. So that was actually some big news that moved it. But yeah, if that ETF gets approved, I mean, theoretically, the ETF for every share they create actually has to hold physical. Well, it can't hold physical Bitcoin, but like the GLD, they actually have to have the gold on hand. So that could definitely be a huge mover, because to buy Bitcoin is not all that easy. You have to open an account like at someone like Coinbase. That's where I have mine. You have to link your bank account up to them. So some people are a little reluctant to do that. Then once you buy it, it might take like literally, you lock in the price today, but then it takes like 3 days to get delivered. Once you open your account, you have lower limits. Like you just can't say, okay, buy me, $100,000 worth. I think you can only buy like $5,000 worth at the start. And then the more information you give them about yourself, whether it's a picture ID or social security number, I believe, I could be wrong on that, then they raise your limits. So it's not super easy to buy it, and especially some of these other currencies, cryptocurrencies. Like I bought some Ripple. I know it sounds crazy. It's
Ripple, that sounds like a good
RIPPLE,
one.
and I had to jump through hoops to buy that one a little bit. Open up a whole nother wallet and then transfer some Ether over to them.
All right, Jeff Goldman. Sounds like it's time for him to write another book. Author of Failed Traders, the 20 common mistakes committed by over 1,000 losing traders. And Dennis and I made some contributions to that book. And Jeff and I go back a long way to the Merkdown in the early '90s, and also trading at oldie. And you got to listen to Jerry Parker, big commodity trader, coming on at 8:35. Jeff. So I'll see you at 5 o'clock, buddy. Have a good day.
Sounds good. Okay, thanks, guys.
All right. A little something different here on Benzinga's Oh, I forgot to ask him, what was that site that he mentioned? Did we rewrite? Because I know some people put some
Can
sites.
you mention it again, Spencer?
I'll rewind it and I'll put it in the chat if I find it.
Or maybe mention it on
Yeah,
the show there
yeah.
too. I mean, okay, so all these are just questions here. Like, a lot of people saying in the chat, like even Ace was saying, some people comparing it to tulip bulbs. I would, I don't know. Like, I'm not a Bitcoin trader. I'm just, asking questions on how to fundamentally value it, and I don't know how. So, reach out to me and let me know how to, crunch numbers and come up with this. Because when some people are putting up target of $100,000 or some people are putting a target of 0, I don't know who's right or wrong here because I don't know how to fundamentally come up with that answer. And we can never know with, certainty on anything. But I'm just saying, when I look at a company or I look at a traditional currency, even looking at gold, there's a way for me to sit down and fundamentally value it. I don't know how, another currency, and Jeff was just saying how many cryptocurrencies are out there. I was saying, what, 70 or something?
Yeah.
What's to say one of these other ones just don't,
exactly.
or 700? What's to say one of these other cryptocurrencies don't take the lead? So I don't know, and this is maybe why it's not for me, but obviously everybody who's invested in it, great job. You guys have done fantastic. Congratulations, Jeff, buying it back at $250 and things worth $2,700 today. I mean, profits, you can't argue with, the bottom line when you're making money on these things. But for me to come in here and buy this thing at $2,700 on my own investment money right now, I want somebody to give me the argument on why it's worth $100,000. I want somebody to write the paper and say this is why it's going to $100,000. And maybe I read that and maybe I change my mind. But at this time, I don't have enough information for me to jump in here and invest in this thing at $2,700.
Yeah, and I'm sure that he's doing that with speculative capital. I mean, it's a very experienced trader. Using the markets, he likes the action. So, interesting topic here.
Some people in the chat, coinmarketcap.com was the name of the site that was mentioned.
Coinmarketcap.com.
All right.
Like, Wave Trader saying you can't value Amazon. Well, you can, because Amazon's a physical company that actually sells product that actually, you can, go on. There's a physical value there somewhere. Is it worth $979? I don't know if that's the case or not. But I'll tell you, it's worth $1. It's worth $2. It's worth $5 a share. It's worth $10 a share. It's probably worth $100. There's a fundamental core value there that, value investors, there's going to be a core value there. So you can physically value that by crunching numbers. Maybe you don't come up with $980 a share, and maybe, it is a little bit of a bubble as well. But there is a value there. That's why I just don't know. And I'm asking. Maybe there's a way. I just don't know a lot about this. Maybe there is a way to physically value it. So that's my question to everyone out there.
Welcome to Benzinga's Pre-Market Prep, brought to you by Bitcoin.
22 minutes talking Bitcoin. We haven't even talked about an earnings report here yet. Let's jump into them, Spencer. We got Best Buy, which may have been the best buy out there. It's up 14% here this morning. This is one I've had wrong for a long time, too. I thought Amazon was eating their lunch. Apparently not, because this stock continues to climb here, up 7 points here. Spencer, how are the earnings?
Q1 EPS of 60 cents versus 43 cents in the same quarter last year. Sales $8.528 billion versus an 8.28 estimate, so they beat on the sales and good year-over-year growth. They see Q2 enterprise sales above the estimate, adjusted EPS in line with the estimate, and the fiscal year 18 enterprise sales growth at about 2.5%.
$57.38. This is a new all-time high for Best Buy.
I'm trying to pull it up here, Dennis.
We got in 2008, 2009. We were high. Were we this high?
Let me go. I'm just adjusting my platform here in Best Buy. Nope, not well. Maybe now that we've hit it. Let's see what happened.
What was the old high?
2006. We had a high. I got so enthralled with Bitcoin here. I don't have my chart set up right, but we did have a high in 2006. It'd be $58.99, Dennis.
Holy cow, we're close.
Yeah.
10 years later, 11 years later, you're getting your money back in Best Buy.
Yeah, I'll just give you the pre-market high, 58.15. You guys don't have to ask my opinion on this. What I would do if I had it long, I would be hitting any bid in sight here. 58.99. I think people that took this home. Also, another thing, adding to the confusion and chaos in the stock, Street kind of leaning the wrong way. Last 2 days, it went from 52 to 50. Shorts piling in here. The haters of Best Buy, which we were at probably $12 or $13, and here it is. So lock in profits as you can, folks. No way could you get me to buy this open.
One thing on this show, and I think both of us do pretty well, Joel, is a lot of times you'll see on CNBC, you'll see on the major media networks, nobody talks about when they got it wrong. How many times? Every time we bring up Best Buy, we talk about how we've got this wrong. I mean, Best Buy was down there at $13, $14 a share in 2012, and I think we even wrote an article, or you wrote an
I
article
wrote
or
an
something
article.
saying, it's a showroom for Amazon. That was right at the bottom. That's
I,
went straight back up. So in our face there, obviously we've had this one wrong for a long time. And I think it was Herb Greenberg that made a great point. I read on Twitter last year, and he was just saying, why would Best Buy does Amazon price matching. So why order it on Amazon when I can just walk into Best Buy and they'll match my price? So,
I,
and I get my product right now. I don't have to wait 2 days for it. It's just easy for me. Best Buy is around the corner. So he's like, why not do that? And, he's been right, obviously, here, because Best Buy has come back all the way from those lows, right back to its old all-time high from 11 years ago. So Amazon seemed to be eating their lunch, but maybe they figured it out. And, congratulations to Best Buy Longs, because you guys got it right.
yeah, actually, on my other platform here, I see a 58.99 high on TradeStation, and I see a 59.50 high on Thinkorswim. So, take your choice on that one. But you know what? I go to Best Buy because you know what? I walk into those stores, I immediately go grab somebody, and I'm like, help me find this. This is what I need.
Yep.
And you can't do that on Amazon. So,
I do too, and we were both dogging it in 2012, 2013, but I've always just went into Best Buy too, and I get my product right away, and they're good. I mean, the stuff is right there in the store, and they do Amazon price matching. So even though you find it cheaper, you just go in here and say, look, I can buy this on Amazon for this price, and typically they will match it.
all right.
I kind of get it, that it's come all the way back, but I definitely wasn't on board for this last, for this run from, $12 a share in 2013 all the way up back to its all-time high of $57. So impressive moves here for Best Buy. One of the retailers that is actually doing well, because there's so many retailers that are just not doing well here. Dollar Tree. Let's go to this one here. And this was, these dollar stores held up for a long time. It's actually disappointing here this morning. It's trading down $1.50 in the pre-market. Spencer, you got the DLTR earnings report?
Q1 adjusted EPS 98 cents. That's in line with the estimate. Sales of 5.29 billion. That's also in line with the estimate. They see Q2 EPS coming in a little bit lower. 80 to 88 cents was the estimate, or was the guidance. 89 cents was the estimate, so they missed it by a penny on the upside. Sales of 5.18 versus to 5.28 billion dollars. That's the range they see for Q2. 5.24 billion was the estimate. So in line as far as Q2 sales, a little bit light on the Q2 EPS guidance.
Getting ahead here a little bit on the earnings report. Not bad, though, just trading slightly down the pre-market. Give us a quick level here, Joel. We're going to fly through these earnings because there's a lot of them, actually.
75.90 is your pre-market low. I see a low at 76 even coinciding with that. So keep an eye on that for a level. Below that, half and whole numbers. Way down at 74.56. That's your March 27th low.
Let's look at Hewlett Packard from last night, HPQ. Stock got wild, I tell you, on this earnings report. It started just popping and popping and popping. It popped all the way to $20.75. And when it was going up to 2050, I was like, you know what? I think 21 will stop this. And I threw out an order to sell short up there 2090 and 2095. And I just missed it. Obviously got down to up to 2075. And then the collapse. So I should have been a little more aggressive there. I might have actually got off a good short, but I did not. But they must have had a hell of a report. Spencer, HPQ.
HPQ Q2 adjusted EPS 40 cents. That beat by a penny. Sales of 12.4 billion versus 11.88 billion. So a nice sales number there. Q3 adjusted EPS, they see that at 40 to 43 cents. That's in line with the 42-cent estimate. As far as the fiscal year adjusted EPS goes, that's also in line with the estimate. So in line guidance and pretty good Q2.
Big pop, but you gotta think like this is HPQ. It's not, this, super, company like 1901 close. When you start buying this thing up almost 10% of the earnings report off 2075, that's short-term irrational exuberance,
yeah.
and it did come right back in.
You remember the old symbol?
Hewlett Packard's old symbol? Oh, you are taking me back, Joel. This was the merger. So it became HPQ after it merged with Compaq Computers. I can't even tell you. Back in like 2001. So we're going back 16 years ago. And then they took HPQ. They did the combo. I think it was... HP.
No.
It was four symbols. It was on NASDAQ, wasn't it?
No, it was... I used to love to trade this thing at Oldie because it was a little bit thinner. HWP.
HWP.
Yeah.
That was the old, and then it
Yep.
merged with CPQ,
Yeah.
which was Compact Computers, and then became HPQ.
All right.
God,
The one thing about this, and
history lesson.
I don't know what the volume was that took it up. Let me look at that bar.
It was some volume.
There
There
was
was some
some
stock
decent
going through.
volume, but to take that thing up, a couple sticks in a regular
Crazy.
session, how much stock would you have to trade, right, in order to do that? So that's kind of
Millions.
millions
regular
and
session.
millions. So you know what? I'm looking at mid-range on the pre-market session here, and after hours at pre-market's a new indicator I'm trying out here. And mid-range on that big after-hours move and pre-market move is 1976. We're right there right now. I got to imagine there's some stock that they're not going to pull their 20 offers, especially since the former all-time high is 1949. Right there right now. We stay above 1950. I think you still got a chance to rally. Man, I think you're going to find a lot of paper, though, in that 20 and 20 and a quarter, 20 and a half. Dennis, I know I'm going to lose a lunch here on the Ford bet, but I would say the high for the day is in
I've already forgot about the Ford bet. You shouldn't have reminded me. The high of the day is in Hewlett Packard. I'm on board with that too. I told you I was trying to short it up there, but I just missed it.
Okay.
So I think even if you get up to 20, I think that's a big psychological level. I think it could struggle even at 20, at least the first time up there. So that's one. It's 1969 here in the pre-market. I bet the book's just littered with size up there at $20. If it can even get up towards there, I'm looking at the book, and there's so much in the book before that I can't even see what's at 20. So book is littered with orders.
I hope everyone in the chat, if you're new to the chat and you're not understanding, what we mean by the book here, we can always answer questions as they come up. But that's just good. You can't have a good till cancel order anymore, right, Dennis? On New York, they have to sit with the broker.
I think they got rid of them, didn't they?
Yeah, well, they sit with
GTCs.
the brokers, but there's orders.
But you can date them still, so you can go out, a long period of time. They just don't call them GTC anymore, or maybe they do. Maybe there is some brokers that still allow GTC orders, but I thought that they were getting rid of that a couple of years ago.
All right, Doug. Quick comments on your stock here, Dennis. Toronto Dominion Bank here. I see a couple prints up.
My stock? Why is TD my stock?
Because wow.
Because it's Toronto.
Yeah. Do we have? I think they have earnings today.
Okay, so we did see. I think a lot of these Canadian banks are reporting. I thought I saw Royal Bank of Canada, which is RY report, but maybe I'm mistaken. Maybe it was TD. So I don't follow. It's funny,
TD
being Canadian, I don't follow closely.
Could you give us that report real quick?
Yep, they reported 99 cents versus a 91 cent estimate. Revenue of 6.27 versus 6.20 billion dollars.
That 40.
Getting a pop of a buck.
Yeah.
The stock, and again, we're looking at it in U.S. dollars here, so we got to consider that. We're not looking at it in its base currency, but they are a little bit off their highs. These banks, Canadian banks really had an incredible run, and now they're starting to pull back a little bit from the highs. But we're going to pop back in TD. I don't know. What are your thoughts here on this one?
Up on very light volume. I'd be keeping an eye on the 48.37 high. That was from April 27th.
Remember, it's always going to be light volume too, because Toronto Canadian markets do not have a pre-market, so they do not open until 9:30. They'll give you indications earlier, but there is actually no pre-market trading in Toronto. So we'll see, at 9:30 what it actually does in Toronto, and then the U.S. price will typically move to what it is doing in Toronto. So we're still, speculating here over in the U.S. 1,200 shares only traded. So some people just speculate it's a pretty good report. It's probably going to trade up in Canada, but it is not trading in Canada yet. So
right. One more earnings report here. Let's go Williams Sonoma. Spencer, you got the numbers on that?
WSM?
Yep.
WSM, right, yeah. They reported yesterday, Q1 EPS 51 cents, that beat by 2 cents, sales of 1.112 versus 1.11 billion dollars. So fine in Q1. As far as Q2 goes, EPS, they see that at 55 to 61 cents. That's in line with the estimate. Sales are also in line with, actually sales are better than the estimate there. 1.195 to 1.23 billion is the guidance they gave. 1.19 was the estimate there. So strong Q2 sales guidance, and the fiscal year guidance is in line with the estimate.
Stock getting a lift here. Only problem is I see all kinds of resistance up to
55.
55 to 56 area here. Now you're already lifting. What's the after hours high or pre-market high here, Joel?
The initial spike was right to 55, even right on the nose.
Big level.
Yeah, we opened above 54, chance to run up to 55. I even see a daily high at 53.93. So keep an eye on those. Spencer, we got a special guest coming on here at 8:35. You want to introduce him?
Sure. Jerry Parker, Chairman and CEO of Chesapeake Capital, commodities trader from way back in Joel's day.
A long time ago.
Yeah. So we'll be right back with Mr. Jerry Parker.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Cannon, along with Dennis Spencer Israel. And we have Jerry Parker on the line. He's the chairman and CEO of Chesapeake Capital. Jerry, how you doing on this Thursday morning?
Great, Joel. Good to hear from you.
Good. Thanks for coming on the show. Now, you're a turtle trader, and we know that you answered an ad in the newspaper that was looking for traders, Richard Dennis of C&D Commodities. If you would not have answered that ad, what do you think you'd be doing today?
Whoa, good question. Scary question. Not having nearly as much fun. I was in the accounting profession at the time in Richmond, Virginia, and doing public accounting. So I'm pretty sure I would have figured out a way to get out of that eventually, and probably have just been trying to make it in the stock world, maybe. I'm really happy that I got into stocks, currencies, commodities, interest rates, long and short, futures, and that sort of stuff. But maybe stocks only. Not sure. But I was a trend follower, and enjoyed the technical approaches before I answered the ad.
Okay. Is there anything from your accounting background that you think has been a key to your success in the markets?
Just sort of maybe natural sort of conservatism and not liking to lose money and being careful and checking your work. Yeah, it's maybe some things like that.
All right. So you started with Richard Dennis of C&D Commodities, and this is back in the 80s. And do you remember like the first important lesson that you learned? Or, I know being a turtle, a trend following system, is there something that sticks out in your mind that was to this day, when you're come across a situation or a trade or something, is there something that sticks in your mind from those early days with Richard Dennis?
Oh, of course. You go through the training and you read and you listen to Richard Dennis and all these experts and geniuses, and they tell you the problems you're going to have and the things to watch out for. And then when real life trading starts in January 1984, you start seeing these issues, and you're failing from the very beginning. Everything they said not to do, you do, and vice versa. So, of course, one of the biggest rules is with our style. We will make most of our money from about 10% of the trades. So it's critically important, and you can't tell which 10% that's going to be. So it's critically important to do all the trades and then sit back and watch which ones make all the money and have these extreme profits. So that happened in February of 1984. February heating oil went from 50 cents to over $1. There was a freeze in New York City, the harbor. They couldn't get the heating oil in. January heating oil didn't do anything. March heating oil didn't do very much. February heating oil only. And when it came time to do that trade, I just sort of sat on my hands and violated the most important rule ever, which is follow the system. That's why entries are so important. Maybe entries are more important than anything because that's the one thing you've got to do is follow the system, do all your entries. Don't be afraid to take a small loss. That's the downside. We have this beautiful mechanism built in that if we put a trade on and it doesn't work, 60% of the time the trades don't work. So you're going to take that small loss. And so it's a perfect methodology and systematic approach. And I blew it and crashed on the very first opportunity and missed a big trade. Fortunately, it happens early in your career, and you start learning not to do that.
So the trend following system. So there you had maybe a signal from your technicals, and then the fundamentals worked your way. Is there anything in in the original system, or have you added? Is there fundamentals? And I guess it depends what you're looking at, stocks or currencies or whatever. How much are fundamentals a factor in your analysis?
I would say pretty much zero. Obviously, you're sort of thinking that you're going to make money following these technical rules, moving averages and breakouts. But of course, you realize that the fundamentals are going to drive the market. You're sort of getting in and getting out based upon the technicals, but like everyone else, this is not a game that's apart from what's reality, what's happening in the world. The lesson here is you don't have to pay attention to fundamentals to be successful. And in fact, one of the sort of ideas that sort of has been lost over the years, and I don't think written about very much, is the non-technical systematic approach that we had, which was to fade the fundamentals. The trades are better if the fundamentals are non-existent, or the newspaper, for instance, is bearish and then you get a bullish signal. That would be a much better trade than sort of having the popular fundamentals line up with the trade. You would sort of want to be everyone being somewhat mystified as to why this market was rallying and you were buying. There's a healthy skepticism at the very beginning is much better than everyone sort of agreeing. And so that was sort of a part of the Turtle program to add that flair into your trading, enter a little bit quicker, exit a little bit quicker, maybe based upon extreme an environment of over bullishness or over bearishness.
We're getting a question here from the chat, and we did a 15, 20-minute talk just here on Bitcoin. Is that something that's entered your trade desk yet, or something you're looking at?
Not yet, but I would definitely look at it. I think, Richard Dennis is famous for saying, I could put my hand over top of the name on the top of the chart, and I would trade the market the same way. And CTAs in general have always sort of been interested in treating all the markets the same way, trading liquid markets, diversified portfolio. And so certainly markets that I don't even know how this Bitcoin works, so it's even probably a bigger advantage. I'll just follow my system and follow those trends. And it's been a hell of a trend. So yeah, this ETF idea would probably be something we would all welcome as something to add to our portfolio.
Okay. In your interview with our own Lizzie Balboa, you mentioned that you hate indexes and that they're the worst possible things to trade. Could you just expand on that comment?
I'm pretty anti-index. I think from a trend-following CTA point of view, that certainly don't think that that's a good idea to trade indexes. I think, with the S&P index, it's in an uptrend, but a lot of times, if you looked inside of those indexes and looked at the components, which we do for every other market except stocks, you would be long some of those stocks, short some of those stocks, flat. No CTA would replace all of these wonderful diversification you get from all these different commodities with a commodity index and trade that as one big glob of something. Trend following that. No, we would want to break it apart and be short the grains, long cattle, short sugar and cocoa like we are now, and let our systematic approach and the diversification play its way out with commodities. And we're not going to just trade the dollar index either. So somehow the industry drops the ball and is satisfied with trading an index when there's lots of fun things going on inside that index, longs and shorts and flats. And then the diversification that you pick up by looking at each market individually improves your performance and drawdown.
All right, so not only do you look at all the commodities markets, but you're one of the CTAs, and I'm not sure if a lot of CTAs use the single stock futures market. Now, Dennis and I have talked about it over the years, and one question we had was the volume and the liquidity. Now, I know for your clients that have futures accounts, doing the single stock futures, you could participate in the stock market. Just tell us about trading those markets, the liquidity, your time frame, and maybe a couple of the stocks that you have in your portfolio.
So, we trade the single stock futures for most clients. They're really good in that they are liquid. There's lots of them. You can get pretty much any stock you want to trade that has liquidity. And we do the same thing with the stocks. We build a portfolio for 25% of our portfolio is equities, so we try to have our equity piece be fairly diversified, different markets, different sectors and subsectors. And this, what makes it so handy is that these single stock futures can be put into the normal FCM account that the client has set up. And so the ease of operation and process is the reason we like them. And the leverage is good, 5-to-1 leverage. Not as good as 10-to-1 that we usually get on the commodity side, but still pretty good. And the liquidity is great. And most of these trades are done in sort of the cash market or basis the cash trade. And it's you're sort of picking up with whatever liquidity the cash has. So we've been an early adopter, and there's not enough CTAs who do trade those. But, why should I desire more competition and people perform better, which they would absolutely do with single stock futures or cash equities.
So you're using the same trend following system in the stocks and the stock futures as you do in the commodities, or have you modified it for the equities?
No, we use the same systems, and we, even though we might be tempted to incorporate additional information that's more readily available in the stock world, we resist that temptation. And as good trend followers, we trade every market the same way. We trade the longs and shorts the same way, the same system, the same approach, and we do the same thing with equities. Why would we not? I don't think I would know how to defend that. And I know that if I was a client and the CTA tried to tell me, well, there's all this extra information out there, I think I would win that argument because we're paid to ignore this information and to go with the trend. No one's going to be long bonds as rates start approaching the zero. Everyone's going to be attempting to sell the high and get ready for the sell-off, except the CTAs. We stayed long the whole time. We got short crude at 90 for no good reason. It goes to 25. That's what we're paid to do, is ignore information or the lack of information and just be the one part of the portfolio that has this diversification, taking small losses, and playing for these black swans.
Before we let you go, you've been in the markets for a long time here, learning the original system for Richard Dennis. What about the change in the markets? What have you had to make modifications over the years to your system, to adapt perhaps to the 24-hour markets, which we didn't have until 1992? Just tell us about, adaptation and changes you've had to make, or are you still pretty much just sticking with your core system?
Well, I think the biggest change that we've all had to make is the realization that there's just so many more traders and trend followers and computers that we do battle with every day. And the markets are more choppy and there's more whipsaws. And we have the long-term trends. Well, sometimes we haven't had them in commodities and currencies for a while. But the stocks are wonderful and the bonds were great. And then, so all we had to do really was just extend our look back period. And so rather than trading a 100-day moving average, maybe we move it out to a 200 or 300-day moving average to avoid being knocked out of the market, in the midst of a huge trend. The trends are just not as smooth as they used to be. So you have to, that's pretty much all we've changed materially is we started in 1983 with an amazing foundation, the smartest, most genius people you'd ever want to learn from. And so it's to their credit that the basic building blocks of how to develop systems we haven't had to change very much. We didn't have a magic formula, but we did have somewhat of a magic structural way of navigating the markets over many years. And so the most material thing is, unfortunately, we just have a longer-term strategy that keeps us in the trends, and then we have to figure out a way when the trend reverses not to give back too much profit. In a nutshell, that's what I'm paid to do.
Lock it in profits as the markets go your way. Well, can you shoot me an email? I know you're not following the indexes, but when this trend changes in the S&P 500 of it going up almost every day, could you shoot me an email? Maybe I can finally make some money on the short side.
Yeah, man.
Jerry Parker,
I'll do my best.
Chairman and CEO of Chesapeake Capital. Talking about commodities, single stock futures, and systems that he's been sticking with for a long time. Thanks a lot, Jerry. We hope to get you back on again soon.
Thank you very much, Joel. I enjoyed it.
All right, S&P futures up 675 here at 2408.75. Dennis, we got to get right back into some of these earnings.
Yeah, there is a ton of stocks here to talk about, and some moving substantially here this morning. I mean, bring up a stock like Guess, GES, and you're just getting to a point where, these things have been so beat up. I think a lot of times these things are just having little short squeezes off the earnings here. Give us the details here. I don't even know the report here, but, when you see it up 13%, you got to think there's some short scrambling for cover. Spencer, GES earnings.
I guess this is good.
No pun intended.
As he's wearing his Guess jeans.
See what I did there? Okay. Q1 adjusted EPS 24-cent loss versus a 32-cent loss estimate. So nice, I guess. Sales of $459 versus $449 million. Good Q1. As far as Q2, EPS 8 cents to 11 cents. 12 cents was the estimate. They see sales growth at 2 to 4%, and for the fiscal year, sales growth at 3.5 to 5%.
Well, I guess the growth is there, but they lost 24 cents in the quarter, so that beat. I guess you can say that beat on the bottom line, and the revenue slightly beat. But the earnings guidance was light. It sounds like for next quarter. But again, this is the market where sometimes things like that don't matter. It's all about sentiment coming in, and everybody's hating on these retailers. We talked about last week on the show that some of the sentiment had been turning towards these retailers. It's funny, the retailers that have been strong, some of those are the ones that aren't doing that great, like Burlington Coat Factory, BORL trading down, and some of the ones that have been weaker here are the ones that are actually starting to catch a bid. So the retailer's still showing a little bit of life here, and obviously we're seeing some life with Guess here this morning. It's trading up 13%.
Okay, I'm showing the daily chart here just to give a perspective of how things have been going over the last couple weeks, and this thing just hit 956, probably like a 20-year low or something. No, not quite a 20-year low. We were back at this level in mid-2005. And now you're getting a pop-up here. Your pre-market high is 1170. I'm just looking at these tops right here at 1170, 1175. So here you are right back where you were 2 weeks ago. 1175 coincides with the pre-market high. That's the number. Above that, yeah, you could keep going. But besides that, a lot of people looking to sell there. Dennis, one stock that we talked about on the pre-market show was PBYI. And Puma Puma Tech Biology or Biotechnology or something?
Puma Biotechnology has just been a monster there. I think Ace was the one that was mentioned this a couple days ago. Anyway, stock has went from $40 up to $77 here now. It's been an incredible pop here for PBYI. I mean, these things are wild, and it's not my style. And if you make money trading wild stocks, by all means continue to do it. But I'll tell you, if you're a newer traders get attracted to stuff that moves very quickly here because they want to make big money fast. Even when I started in 1999, I was attracted in the penny stock market. 1998. Well, actually, I started in 1997. And I started with Bright in 1999. So when I started in 97, it was the penny stocks that got me involved because you see these big money being made fast, and you're like, man, I want to get involved in the stock market. Over the years, I've just evolved, and it's funny, now that, I do it, full time as a living. I've done that since 1999. I've found over the years that, I like boring, more, it's more my style. And you've got to find the style that works for you. I know Ace is great at trading these wild stocks, and, that's why he does a really good job with it. But at the same time, it's difficult. I find it very difficult to trade these stocks. I've never been very good at trading the really wild stocks because the moves are so violent. I find the risk management very difficult to control and to control the risk. So that's why, in these kind of stocks, when they're taking off like this, it goes from 40 to 80, doubles in 3 days. I mean, it could double again. It could go up to 100. It could pull back. I mean, it can really go anywhere. It's hard, really, again, for me to sit down and crunch out numbers here and get a value for this because, it's a rocket ship, and I feel like I'm late to the party on this one.
I know it seems like I have an opinion on almost anything, every stock, but on this one, I mean, buyer or seller, beware. If you're trading it today, you can see that pre-market high at 69.75, so that could be a target on the upside. Definitely shorting. You have a lot of risk here on the upside, and then you go to the weeklies here, and $80 has been a major level going back since December of 2015. I know absolutely nothing about the fundamentals of this stock or what's been moving it, so another reason for extreme caution. But, 80, a breakout above there, you could see triple digits. But like I said, this is a really $80, 79.65. If I had this thing long, I'd be looking to get out at that level and not shorting it. Let's see here.
The way Fuzzy trades these things, he says, get there first and always leave before the beer runs out.
I've been in a few stocks like that. A few more earnings to cover, maybe from this morning.
Yeah, there's a few. Well, and if you have a specific stock you want to talk about, let us know because there is just a ton of companies that reported here. One of the big days when we were coming out of earnings season here. Let's jump over to Signet Jewelers because SIG got hit yesterday on the Tiffany earnings, and now it's getting hit here again on its own earnings. I mean, this Signet has been in a world of hurt. SIG down another 4 points in the pre-market. If we just go back even to 2015, this stock got up to $150. It's now down 66% from those highs because we are trading at $50 here right now. Even big psychological level I give you. I love the psychological levels of $50, $25, all those big round hole numbers like that. I do like those psych levels. Sometimes they take them out, by like 20, 30 cents and then bounce back through them. So that's one level I would be looking at on SIG here. If you're looking at bringing in a short, I'm not sure I'm jumping in here and trying to call a bottom though.
All right, pre-market low here. Just hit after the report. You got a pre-market low of 48.60 it looks like. So that could be a potential support point. Gap down from yesterday. Oh man, 50 and a quarter. I see it holding there. Once again, windfall on the short if you have it. If you're trying for a long here, maybe let it settle in for a day or two. Hormel Foods, did that report yet?
Spencer, we got HRL?
Let me check. We do. Yeah, we had that at 6:30. Q2 EPS 39 cents. Missed by a penny. Sales of 2.2 versus 2.23 billion. They did reaffirm their outlook for the fiscal year. EPS and EPS outlook is $1.65 to $1.75, which is in line with the $1.67 estimate.
Okay, the food stocks, I just want to say in general, are starting to show some life right now, especially look at the chart from the last 4 days. Now you get a pullback here, on 400 shares have only traded here. I think this thing gets anywhere near 34. I think, you're going to have people coming in, especially anybody who's short at the last 4 days, bringing those shorts back in. This is one that has a potential to maybe get down that 34 area and bounce. So I don't know if it's going to get that far down. It's, food stock here, but I'll just say, when I'm looking at the charts of the food stocks, everybody, they've been hated for a long time, but they're starting to show life. GIS starting to show a little bit of life. Kellogg's is looking, a little bit better on the charts. Kraft Heinz has come up the last 4 or 5 days. Food stocks are starting to show some life. I love buying stocks that are pulling back, on an earnings event, just a one-time event here. If the earnings aren't that bad, obviously, when they're starting to come back in a favor. So I kind of like this HRL on a pullback here today.
I mean, Amazon has to sell something, right? Someone has to make it for them to sell it, right? So here, some of these food stocks, GIS is getting a little lift. HRL, I'm looking at the chart here. Nice rally going into it. On the upside, yesterday's high was a recent high of the move at 35.48. Maybe wait for this one to get green on the session, but that's right up near yesterday's high. 34.20 could be a level on the downside. That's your 4-day low. And for down War Dog, we'll cover one more stock, FFIV here. Just kind of sitting near the bottom. Before I say that, let me look at the pre-market chart. Moving up towards 127. Does this fall? This is not cyber. What sector does this fall into?
F5 networks. It's cyber.
Networking. Okay.
Yeah, cybersecurity. I thought.
I mean,
F5 networks.
Yeah.
I don't know if it's cybersecurity, is it? It's just networks.
Yeah, just like it's a software provider. It's Cisco is a pure play.
I mean, it looks like it's trying to get some traction. I think the only thing that bothers me is the gap between 124 and under 120. So if I'm trying to swing long here, I think I'd have to cut it out under 124.
Also, last 2 days where we just talked downward dog is he was messaging me asking about technical thoughts on CME here, Joel. Let's talk 2.24% dividend here. Stock has been in a consolidation period for a couple of months here. What are your thoughts on CME?
I wish I would have bought a seat when I went down there. Looking at the stock here, you got a little bit of a double top. We'll see. I just don't know how the trading volumes have been in this quiet market, but on the upside, I'm just keeping an eye on 118.50, two highs at 18.42 and 18.48. So could get a nice pop up there closer to 120. So 9 a.m. here, we covered a lot of Bitcoin here. Spencer, you want to preview the final show of the week?
Yeah, Phil Davis, founder of Phil's Stock World, will be joining us tomorrow at 8:35. Hope you enjoyed today's show and our chat on Bitcoin, our chat with Jeff and Jerry Parker. You can catch the whole show again on our podcast on iTunes, SoundCloud, or Stitcher, or just catch the whole show. Rewind it live on YouTube. Just go to Benzinga's YouTube channel, BZ TV. There, please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. That's it for our Thursday show. Hope everyone has a good day out there. Good luck out there trading. We'll be back with you folks tomorrow. For Phil Davis.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.